Hi class, and welcome to video number 3 for capital leases on exercise 15-8, and this will be in page 903. Once again, it wasn't required to do this amortization table, but I made it anyway so that it'll be easier to make our payments, payment entries or journal entries for the requirements of this exercise. So on page 903, exercise 15-8, on June 30th, 2013, Georgia Atlantic Inc. leased a warehouse facility from IC Leasing Corporation. The lease agreement calls for Georgia Atlantic to make semi-annual lease payments of $562,907 over a 3-year lease term, payable each June 30th and December 31st, with the first payment on June 30th, 2013, which is right here. Okay. Georgia Atlantic's incremental borrowing rate is 10%, the same rate IC uses to calculate lease payment amounts. Depreciation is recorded on a straight line basis at the end of each fiscal year. The fair value of the warehouse is $3 million. Okay, so we got the $3 million here with the fair value, and once again, I'm going to show you again the calculation of the lease payments. Okay, so the requirement 1. Although it was given, it also asks us to calculate that fair value, and it should come out to $3 million. Let's see here. So calculation of the present value of lease payments. Okay. So once we will take that 562,907, multiply it by the factor using table 6. Okay, so my number of payments is going to be 6 because it's for 3 years. Interest is made semi-annually, twice a year, so 3 times 2 is 6. Interest will be at 5% because interest is calculated twice a year, or payments are made twice a year, and interest is 10%. That makes my factor 5.32948. Okay, so if I plug that in here, 5.32948, I should get 3 million. And there's a rounding error, so what I'm going to do here is just put 3 million in. We have to round it to the nearest dollar. Nearest dollar is 3 million, or nearest $100. Okay, that's what the requirement says. Okay, requirement 2. What pre-tax amounts related to the lease would Georgia Atlantic report on its balance sheet at December 31st, 2013? Okay, remember in the balance sheet, we're going to report a liability and an asset. Okay, so like the previous problem, in problem 15-5, I showed you that in here. Okay, so we're going to kind of do that over using this amortization table. So the liability at December 31st, 2013, my initial balance, June 30th, 2013, is the 3 million. Okay. On June 30th, 2013, we had a reduction of 562,907, our first payment, which is this right here. Okay. As of December 31st, 2013, we also had a reduction for the payment of $441,052, which is this one here. Let me just put the dates in here so we all know where I'm getting this from. Okay, there we go, so that we can dictate better where we're getting these numbers from. All right, so that makes my December 31st, 2013 liability, net liability actually, of 1.996.04 or 1.996 million. Okay, that's my liability. Now for my asset, okay, my initial balance, once again, on June 30th, boy, is that $3 million once again. Okay, then to get my net asset, I'm going to net it with my accumulated depreciation. Okay, and that depreciation expense is calculated as such. We're going to take that $3 million, and it's straight line depreciation method, so we're going to take the $3 million divided by 3 years times 1/2 because only half a year has passed. So my depreciation should be $500,000. Okay. So that makes my December 31st, 2013 balance for the assets. Oh boy. Of $2.5 million. Okay, so that's requirement 2. Okay, put a freeze paints in here. So when I scroll, we can see this. All right. And I believe, let's see, is that it? What? I think that's it. Okay, didn't have to put that freeze paints in there. So just, no, excuse me, requirement 3. Skip it, I thought I did requirement 3, you're right. Okay. All right, requirement 3, what pre-tax amounts related to the lease with Georgia Atlantic report in its income statement for the year ended December 31st, 2013. Okay, so like once again in problem 15-5, we did this as well. So we're going to calculate the expense for year ended December 31st, 2013. And we're going to list the expenses for interest that we paid along with accruing for depreciation expense. So on June 30th, our interest expense was the $121,855. Okay, that's the interest that we paid as of June 30th. Excuse me, 0. Okay. On December 31st, 2013, Okay, we paid the $121,855. So my interest expense for 2013 is the $121,855. We also have to accrue for depreciation. And the depreciation we calculated from above that it was $500,000 here. Okay. So then my total expenses for 2013 would be the $121,855 and the $500,000. So my total expenses recorded as of the end of 2013 will be $621,855. Okay, and that's then exercise 15-8. All right, you have any questions? Make sure you email me or call me. This will be I will post all 3 problems and each of the videos. This is the 3rd video that would entail, well, the notes for will entail all 3 of these. So I'll just post in each video the same notes so that you would have the opportunity to print them out.